Looking at the stock markets of the US and China, we can see prolonged weakness. No, you don't have to deny it. Just look at the charts. Just look at reality. Unless we see QE4 or some sort of government stimulus, as in the tightening trend reversing, we will see continued weakness in global stocks. You came here for the truth, so let me unveil that for you. Today I'm energized, I'm looking at the markets, and I'm seeing the trends worsening. Alright, so let's begin by taking a look at this. The Shanghai Composite has dropped another 1%. This has been going on. You're looking at the 6-month chart here. I can show you the 1-month chart. I can show you the 5-day chart. We know where the trend is. Peaking out with other markets here in late January, headed down ever since. But it's not just China. We're looking at stock markets all around the world seeing the same deal. 2018 is all but normal. I mean, we just look at how it was throughout 2017. Everything seems stable. There was a lot of growth there, but emerging markets started to get weak. You saw what happened in 2018, no doubt. Now we're seeing it much of a problem here within China. I'm also noticing this in the US, other than, of course, a few stocks. Now, let's take a look at this next chart showing you the Dow Jones Industrial Average closing below its 200-day moving average 7 days in a row. This is now starting to form a support line in here. We can see that this is going to become a trend unless we have something major that changes that. What will it be? Will it be QE4? Will it be stimulus? Will it be some sort of deal that's made? Well, either way, it's going to have to be something big, or the intervention that will need to take place is going to have to begin or reverse that tightening trend, as I've said. Look at this. I don't know how up to date this chart is, but essentially we're looking at 2018, and this is what the companies themselves have been trying to do, and that is engage in record amounts of buybacks. And you could see that throughout 2018 here. We have this trend from 2017, 2018. The trend is basically rising, increasing further and further buybacks here. It is important in order to keep the market afloat. They need to have more buybacks all the time. They are doing this now for a little while here, and we can see that it has boosted stocks. There's no doubt about that. These companies are, in fact, engaging in what they are able to do, right? So they have a very limited amount of resources, and one of those that can affect the stock is to be able to buy back their own shares. They're also doing funny accounting measures, which I've shown you here before. Statistically, I constantly mention it, but Infectious Greed by Frank Partnoy. The link is in the description under my favorite books if you want to check that out. It talks all about how they're able to postpone any and all of their negative financial figures indefinitely. They could do that. But I would like to suppose a theory here. When would you want to make your figures look bad? And that, as far as I'm concerned, during the financial crisis or any financial crisis, wouldn't that be a perfect time? Maybe you can get yourselves a little bailout money. Maybe you can get yourselves a little bit of favorable regulations if your company's hurting and maybe a lot of jobs are at stake. But of course, if you're a small business owner, you won't get any of that. You just get increased taxation. Now, moving on. This heat wave's so bad, it's even slowing down the US stock trades. Can you believe it? So you may have been experiencing this heat wave that's going through, and it's even saying here, high-speed traders are no exception. It's actually slowing it down. I mean, we're talking about 2 microseconds. However, I just found it interesting that even the high-frequency traders are affected by what's happening here. And that really brings me to my point here, and that's essentially, with high-frequency trading, you as an individual don't stand a chance to beat them. They have gained control over the markets, and it is nearly 100% of all trades that take place. These computer programs are all ready and waiting for certain trigger points. If those trigger points are met, stocks will fall. If they start to fall, other ones will trigger, and that will make them fall further and fall further. And they will, at some point, need to halt trading. The next crisis that we have, they will have to halt trading that day. That's for sure. They're going to basically lock you out of your money for a period of time. Now, they can reopen and basically have the Federal Reserve come in and say, hey, we're here to backstop it, and they could stop the losses somewhat. However, it doesn't really work like that historically. But I do believe that at some point in the near future, when this occurs, we're going to have this complete halting of the market. Now, it does happen on occasion where you see some so-called technical difficulties and they have to shut the market just for a short period of time, but I think it will happen on a much wider scale at some point. This is interesting, sent in to me by a subscriber, and you can see that the price of crude oil and recessions are often correlated. So you'll see that here on the chart, the price of crude, the higher it goes, ultimately it's going to put a burden eventually on the companies for transport, for individuals at the gas pumps, everything interconnected with that. So it's interesting, to say the least. It's not 100% correlated, but I would definitely look at this as being an indicator. Very good chart here. Thank you to that individual. Debt at UK listed companies has soared to hit a record high of 390 billion as companies have scrambled to maintain dividend payouts in response to shareholder demand despite weak profitability. They are struggling to maintain their dividend payouts. These companies, as I've said, can do whatever they want with their paperwork. They can make it look fantastic. But here in this case, they're suggesting, oh, well, maybe we're going to have a little issue with dividends. And that's one of the things about dividends, why I don't like them, is that stocks, people often buy into a stock and they think that they'll get the dividends. I like that. I think if you're going to invest in paper assets, you want the ones that provide you an income. Number one, I don't like it because it's quarterly usually. And the fact that, within that 89 days, you're held out of any income instead of making it on a monthly basis like some other assets. At the same time, you have this situation where they might decide tomorrow to not give out any dividends. You don't know. So what we can see is that oftentimes throughout hard times, the companies may reduce their dividends. Okay, so that could occur, and that could totally throw off, what you have invested in there. Not all companies do that, and it depends how bad the situation is, but something that people should definitely know. It goes more into this. I mean, look at this. UK's PLC net debt has surpassed the pre-crisis levels to reach 390 billion in 2017-2018 financial year. We are gone far beyond in so many instances. I mean, it's ridiculous. It doesn't matter if you're looking at the UK, it doesn't matter if you're looking at the US or any emerging market. We're surpassed it. We've already gone there. But they have implemented these quantitative easing measures, and that has supposedly fixed the problem. But of course, we know that's not the case. I'll move on from here. But if you're interested in some information about the UK, definitely check this link out. It will be in the sources. We have this issue here with robotics and automation that, as far as I'm concerned, will replace a lot of jobs. The majority of jobs eventually, several decades from now, will be replaced by some sort of robotics or automation. You can see in the financial industry, robo-advisor is becoming a new term. Why even have an individual there when they're just clicking on a couple forms? You can have the individual do that themselves. So that's what's happening here. This is quite interesting. I don't know how it's pronounced, but Hadrian. And this is a brick-laying robot, and it can build a house in a day. It can lay all the bricks of a house in a day. That's the claim here. They were actually doing a deal with Caterpillar, so they're very popular now. It's growing, definitely. I think that it's going to take place, and they're going to implement this. This machine doesn't take breaks. This machine doesn't need healthcare. This machine doesn't really need what average individuals need. And should it break down, I'm sure it's not going to be complaining. It's simply going to be replaced. And that's just the way it is. So there will be jobs because somebody's got to maintain these robots and so on. Somebody has to design them and engineer them and everything. However, the total, I would say the total amount of jobs is going to be reduced. So what's the solution? Well, you can ask billionaire Richard Branson. America should give out free cash to fix income inequality. So in this interview here, he basically goes through and he was asked a question about income inequality, and he answers basically saying they should give out free money to people. And he talks about jobs, automation, how as that goes and takes place, that more individuals will need this universal basic income. I just think it's a little bit silly. The reason why I mentioned this here is basically that where does the money come from? That's what I don't understand. Whenever there's somebody who's positive towards universal basic income, I just need to know, where does the money come from? They usually say tax the rich, but it doesn't ever work like that if you understand the way it is. If you tax these business owners, small business owners who maybe have 10 employees or something, they will just fire 2 people. I mean, if they're going to get taxed more, they're going to just fire 2 people. And that's the way it is. So you will just create more unemployment. That's a fact. That's an absolute fact. All right, very quickly, last one. This is about New Jersey. And essentially what they did was increase taxation in order to prevent the government from shutting down. And there's details in there if you want to look at it. But essentially, we only have one solution, and that is taxation. That's it. That's all the government can do. Well, what should we do? We either put a person in jail or we tax them. That's pretty much what government is able to do. You imprison them physically, or you imprison them using monetary slavery. They are guilty as charged. There's no doubt about that. And I'm just constantly reading this information. I'm fed up with it. And once people start to wrap their minds around what monetary slavery really is, then they start to wake up. You and I, we know it. But, you know, do your family, friends, coworkers, and things know it? Probably not. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And if you want the financial education that you were not taught in schools intentionally, then you want to read these 2 books. When you read these 2 books, you figured it out. You get the whole foundation, you get the whole history, the whole knowledge squeezed down into books that are so easy to read. So check them out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.